Today, I'm going to show you one of the most powerful tools that institutions actually use every single day. When you combine VWAP with basic support and resistance, it becomes an absolute game changer for finding high probability entries. In this video, I'm breaking down exactly what VWAP is, how to set it up cleanly in TradingView, the simple rules for bullish and bearish setups, and how to use multiple timeframes for even stronger confluence. So we're going to throw it up on our chart. Simply searching for VWAP in the Indicators tab, you'll find it as a free indicator on TradingView. First, select the VWAP, then place it on your chart. You should see the main line, plus an upper and a lower band. For a more professional and clean look, go into the settings on your VWAP. Turn off the upper and the lower bands. This will leave you with just a single line, being much easier to read. The VWAP looks just like a moving average, except it's way smarter. A normal moving average only cares about price, but the VWAP multiplies price by volume traded. Thus, it gives you the true average price, where most of the money actually traded hands. And that's why big institutions love it. They need that huge liquidity. When they buy or sell, they gravitate towards that price level, where the heaviest volume has already happened. And that makes the VWAP act like a magnet for price. The VWAP is primarily used as an intraday indicator and resets at the end of each trading session. So how do we use this to trade just like those big institutions? Here is a super simple rule. If price is trading above the VWAP, it will have a bullish bias. If price is trading below the VWAP, it will have a bearish bias. In almost every scenario, the VWAP will act as a dynamic support and resistance that moves with the market. Let me show you exactly how this plays out on a real chart. We start with price trading below the VWAP, a clear bearish bias. Then price breaks and closes above the VWAP and begins to hold it as support. That's our first clue that sentiment just flipped bullish. Now we look for confluence, supporting evidence that this market is looking to continue to the upside. I anchor my Fibonacci retracement tool from the most recent swing low to the swing high. And look at that. The 618 level lines up almost exactly with the VWAP. Now that's what we call confluence. Here, price pulls back and reacts beautifully at that VWAP and 618 zone, then breaks to the most recent swing high. We can look to enter on a long of the break of structure or a bullish candle close, setting our stop loss below the recent low, or the VWAP if it's tighter, and targeting the next major resistance for a 1 to 2 or 1 to 3 risk to reward. Simple, clean, high probability. Remember, the VWAP is most effective when used as a confirmation tool and not a standalone strategy. Now let's look at an example where the market is trending bearish and the VWAP can be a helpful tool for us. Here, price initially is above the VWAP and respecting it as support. However, strong selling pressure is causing the price to break down below the VWAP, and it's suggesting a bearish shift of momentum. Once below the VWAP, price retraced back to it, where it has now acted as resistance. Sellers are entering to open new positions. After price trades into this region, we wait for bearish confirmation, such as a bearish engulfing candle. And once confirmed, we can enter a short position, placing the stop loss above our recent high and targeting lower price levels. Do you remember when I said the VWAP was mostly an intraday indicator? Well, here's where most traders stop and where the pros separate themselves. In TradingView, you can change the anchor period of your VWAP. Instead of just the daily session, you can anchor it to the weekly, monthly, or even yearly VWAPs. Higher timeframe VWAPs carry much more weight because they represent much more time and traded volume, both of which suggest where institutions have been accumulating or distributing over long periods. My favorite setup is to overlay multiple VWAP timeframes by adding another VWAP indicator and adjusting anchor periods. This can look like the monthly VWAP, the weekly VWAP, and the session VWAP all on the same chart. That might look something like this. We can see that price is trading above the monthly VWAP. This is shown in purple, but what it also tells us is that this market is trending upwards. The average price of purchases continues to climb over time. Price was trading below the session VWAP for a while, but after it was retaken, this gave us a sign of strength. In this scenario, we could look for a long opportunity as it retraced back to the session VWAP. This just so happens to line up with an old horizontal level, which just adds confluence. We can look to enter when we get some confirmation, like a bullish engulfing candlestick right here. Simply setting our stop below and aiming for targets above. VWAP is one of the cleanest ways to know real market bias and find high probability reaction zones. When you combine it with price action, Fibonacci, and higher time frame anchors, you're no longer guessing. You're trading with the institutions instead of against them. If you found this video valuable, drop a like, share it with a fellow trader, and subscribe so you never miss a new strategy. Drop your biggest takeaway in the comments. I read every single one. I'll see you in the next video. Trade smart, and I'll catch you on the charts.